all excited to know more about stock market. For today's video we were going to tackle about a book review about stock market. This book review is all about Beating the Street by Peter Lynch. These are the key takeaways from this book. Legendary money manager Peter Lynch explains his own strategies for investing and offers advice for how to pick stocks and mutual funds to assemble a successful investment portfolio. If you look around you, and notice what you use and like and what other people seem to use and like, you may have found a good company to invest in. It's important, he says, to understand what the company does. Invest only in stocks that you have an understanding of. This understanding comes from being observant in daily life and making the effort, a couple of hours, to do the necessary homework to follow up on the notice made. Whatever method we use to pick a stock, our ultimate success depends on our ability to ignore the worries of the world to allow our investment to succeed. We can never be certain about a company rewarding us with stocks increment, but we can improve our odds by knowing what are the factors that make our company profitable. For cyclical stocks, PE on rising means that the cycle is going to go upward. While PE on the downturn means vice versa, as earnings are going up and price stays the same, it means the stock is probably close to the end of cycle. Avoid company with bad balance sheet at all cost. Buy cyclical stocks at the end of a recession. Bargains are the holy grail of the true stock pickers. Stock picking is both an art and a science. You need to be able to tell with your gut feeling about a certain stock "s future, as well as the ability to break apart the balance sheet and check if the company is doing good, well or great. You have to research the company before you put your money into it. When you invest in the stock market, you should always diversify. The stock market really isn't a gamble, as long as you pick good companies that you think will do well, and not just because of the stock price. You should invest in several stocks because out of every 5 you pick, one will be very great, one will be really bad, and there will be okay. Never fall in love with a stock, always have an open mind. Buying stocks in utility companies is good because it gives you a higher dividend, but you'll make money in growth stocks. Just because a stock goes down doesn't mean it can't go lower. Over the long term, it's better to buy stocks in small companies. Lastly, you should not buy a stock because it's cheap but because you know a lot about it. As long as you're picking a fund, you might as well pick a good one. That's all. Thank you for watching. Kindly follow our page for more info about stock market.